How's it going? Welcome back, it's Jonathan, and in this video, I'm very fortunate you're not going to be able to see my beautiful face today, and that is because I have just purchased a new computer and I haven't yet finished setting everything up. So for those who were curious, before we get into it today, the computer I bought, which is going to be my main editing and also analysis computer, was the NUC 11 based Canyon. So you can take a look at that online if you wish. I've had a few people reach out to me in the past asking what is my trading setup, and I don't use anything fancy when it comes to my trading setup. I'm mostly focusing on the video editing side of my computers because you can use any software on any computer. Now, a lot of traders out there that like to flash multiple screens. You really don't need multiple screens. The best way, which you'll see in my videos, the best way to actually display your charts is by breaking down each type of analysis onto a separate chart instead of having multiple charts. And you've seen a couple of guys possibly on YouTube do the similar thing. I used to put all my analysis on one chart and then sort of hide different tabs. So let's say, for example, I pull out this little tab side panel on the computer here. I could hide certain things if I didn't want that showing. But what I started to do instead was have the same chart. So for example, the same market, and I just simply switched between the forms of analysis as we move through, and that you've seen me do that for many months now. Now, excuse the delay, I am currently using a cloud PC provided by Microsoft. This is what I wanted to have my charting software on, so that way I could use, I could access my charts from any computer, any mobile phone, anywhere in the world. And I'm getting a bit of a latency issue today, so there's going to be a slight delay in some of the analysis I can actually perform because I've got an issue with the connection I'm on at the moment. And I haven't even finished setting up this computer. I mean, look at this down here. Activate Windows. Go to settings, activate Windows. Okay, first of all, I have two SSDs in this computer, which both have Windows 10 Pro on them. But when I moved those SSDs, and I did because I moved those SSDs into a new computer, I formatted them again, and I reinstalled Windows. I actually lost the serial keys on those SSDs, and now it's asking me to repurchase Windows. So I might go out and get an OEM version of Windows today, so that'll go away by the next video. I don't pirate Windows, I just haven't finished setting it up. I got this computer sent in 2 days ago, and now I'm just trying to, go through all the tweaking, get the webcam set up, get the camera gear set up, get the microphone gear set up. So everything's going to be different today, from the quality of audio out to the latency issue I'm experiencing on this cloud PC from Microsoft at the moment. Now, if you want to go into getting a cloud PC, before we jump into the charts, for those of you who are interested in this kind of information, you just want to search on Google for Windows 365 and then cloud PCs, and you'll get the prices. I'm paying about $55 a month for this one. It's got 2 virtual cores, 4 gigabytes of RAM, 128 gigabytes of memory, and I'll take a look at the performance at the moment just so you can see what we're running at. Go ahead and squeeze this out. So as you can see, with Windows installed on this virtual PC here, which is running my Optima software, we are currently sitting at 2.7 out of 4 gigabytes. So it's perfectly fine to run a software like Optima on a virtual PC. It's going to run perfectly fine. We do get spikes to 100% in the CPU, so I think the CPU could be a bit stronger. We are running Xeon Platinum CPUs, which are technically meant to be quite powerful CPUs. They do have a base speed of 2.59 gigahertz if you're a nerdy type of guy and that makes any sense to you. Though if you're going to be using software, maybe even like TradingView, don't worry about getting a more powerful process. This is at around $55 a month over a year. It's going to equate to around $700 a year. So in 2 years you paid $1,400, and then you just rinse and repeat that depending on your lifestyle needs. I just made the decision for this based on getting a new computer, say every 2 to 3 years, and I generally purchase top-end hardware. So I've got the Asus ZenBook Duo, which that's a $2,500 laptop, and I've started to find that I always overspend on hardware, but always underutilize the actual specs in it. So, and I normally upgrade a computer like every 2 years. So by getting a virtual PC, I can use it on anything. I can get an iPad, I can use it on my phone, even on Mac. So if I'm out and about and there's a Mac at another place, I can just log into the virtual PC and I can do the charting and update. So I was finding that when I was writing on a Mac, I couldn't finish all my analysis because I didn't have access to Optima, which is a Windows only software. So anyway, just thought I'd give you guys a little update on that. Let's go ahead and just jump into the charts. Now, I'm not going to start on Bitcoin today. I wanted to jump over to the Dow Jones cycle, because there's one thing that I've been saying for a little while, and that was a no to a Santa rally. And I based that assumption purely based on the forecast, where we were going to get this seemingly strong rally in the forecast. Obviously, we know that the forecast's directional bias isn't something that we actually look into. See, what we're looking for is angles and not amplitude of angle, okay, with these forecasts. So as an example, if the forecast says we're looking for a top and we're looking to move down, which we've gone over many times, we're not looking for the amplitude of that. So let's go ahead and just squeeze this up, for example, because we can actually modify the forecast. It's actually going to lag so much that I can't. Okay. Yeah, the ping at the moment on my connection to this virtual server isn't that great, so I'm not going to try and even doing that. As you can see, there's a bit of a lag. So everything on my desktop works fine, so I can use the pencil, no lag at all. So anyway, we're looking for this angle, not amplitude, of down up. And then as we went towards the end of the year, we saw the angle start to face down. That's kind of what we're getting, where we got this run up from price. So we had our top, which was here. We had our runs lower. Then we had our run up. Then we have our run lower. Then we have our run up. Then we have our run lower. Again, when you do these forecasts, I don't know the exact events that are going to repeat, and I try not to focus on the exact events. But what I've done for 2022 is I've started to highlight, especially for the US markets and geopolitical events, I started to highlight events that I believe may be repeating into 2022. So I go through what I've done for the 2022 report that I didn't do for the Bitcoin report that many of you would have gone through already, is I go through a lot of the basis of forecasting which is taught by these top forecasters, such as the ones like W.D. Gann, Larry Williams. Larry Williams' forecasts aren't that great, but he does teach it. Some of my mentors, you got Phil Anderson out there. I go through a lot of the core forecasting research that I have not shared anywhere, and I've always been keeping that private. But if you have the time to read it, I'm launching that. It was meant to be launched a couple of weeks ago because I really like to get them out in November, but I'm going to be launching that in, say, the next 1 to 2 weeks. It's going to be in the description, in the link below. I'm going to be going through what political events and geopolitical events I believe are going to happen in nations and economies next year, and how that's going to have an impact on the markets. But you can just see how we can generate a forecast and how that forecast can sort of play out in the markets. And it's not just this simple riding blind for the whole year. You can look back in the past, and if you have the right starting point, as Gann always used to say, if you have the right starting point, you can find sequences in the markets, in the economies, in human nature, etc. You can find these patterns and these rhythms that will continue to repeat. Now, you don't get it exactly because, as they say, I believe it was Mark Twain, I'm not too sure, you'll have to look up the person who quoted this. History does not repeat, but it often rhymes. And if you don't know what you're looking for, or if you don't know how to find the repetition or the rhythms in the market, then how are you meant to actually create your own little forecast? Well, that's exactly what I'm going to be showing you in the 2022 market. And we've actually started to produce our forecast and we're getting that up and running right now. So at the end of the year, I believe that the end of the year was always going to be that topping out in December and run lower. I don't think that we're going to get that Santa rally that everyone was going to be talking about and getting cheerful for. And we can just see that it's a coronavirus variant that has caused that downturn. Now, I'm not bullish on next year. I'm actually biased to the bear side. So whether the market flips polarity with its forecast and it actually becomes bullish, that's yet to be seen. But I think that the downside in the market is a lot stronger than the upside at the moment. And I go through in the report as why that is, and I really want to get that out to you so that you can read it. But that's just an update on the Bitcoin market, just so that you can see how it's the Dow Jones, just so you can see how it's playing out right now. Okay, so with Bitcoin on my mind, I'm actually just going to switch over to Bitcoin because I know a lot of you guys come here for the Bitcoin information. Now, I did have someone reach out and they said that my content was too advanced and I should be focusing on simple topics because then that'll help grow my channel. To that, I would like to say, I'm more than happy to focus on the simple topics. I'm more than happy to talk about the meme coins and hype everything up, but I don't think that gives you a real edge or an advantage in the market. And that's why I don't actually venture down that path, because I want to give you an edge and I want to show you that you can do what they tell you is impossible. And I want to make it very clear that whilst you might not be right all the time, and I'll point out some areas that I was wrong today, it's the edge in the market that is going to help you become a better trader, make smarter moves, etc. And these other guys, they won't teach you this because they don't understand it. And those that do understand, I've seen some guys get into this field right now, they are years behind in their research and understanding of how the market actually plays out. They brag that they're really good at it, but when you look at their forms of analysis that they show you on their videos, and I'm not trying to dig anyone in specific, when they show you their forms of analysis, and of course there are some great ones, it's really weak and there's no real conviction, and they're using oversimplified method. So anyway, as we can see from the weekly chart, we have got this reverse in the market where we're only, what is today, like Thursday, not Friday yet. We're only one day away from the end of the week, but we are currently in the upper band. So when we use our short-term analysis, we're in the upper band, which is the upper half of that bar, and that's good. We want to make sure that when we get the market moving higher, that the closing price is in the upper half. And the reason for that is because it puts the bias to the upside for longer. When we start getting the closing price sort of shift lower, and it starts to struggle to get to the upper half, then we can start to see that the market might be changing direction. So the more times that it pushes to that upper half, it gives us an idea that there's more bulls than there are bears. So you see upper half, upper half, upper half. Sort of got some indecision here, upper half, and then it just reversed. And then we sort of got that push down. So that's how you use that short-term bar analysis, where you look at each individual bar. Now, bar analysis and candles, I always say to people, if you want to become real proficient at charting, always use a bar chart and not a candlestick chart. Now, the reason for that, I'm going to show you right now. The reason for that is because a candlestick chart is exactly the same as a bar chart. It's just drawn differently. Now, a lot of people try to use candlestick charts because they want to be fancy. You don't need to be fancy. You don't need to use a candlestick chart. You can use a bar chart and just simply draw in the candles with your mind. This is a bar chart now drawn as a candlestick chart. So if you want to actually know what the candle formations are going to be, well, here they are. The bar chart gives you the candle formations, and it actually gives you other clues in the market that the candlestick chart may sway you away from. For example, let me waffle a bit. When people draw trend lines on a candlestick chart, they take the candles and they draw the trend lines from the bottoms of those candles. That's not how you draw a trend line. You don't go from the bottom of the candle. I mean, like the actual candle itself and not the wick, etc. You don't do that. You always draw from the lows. Okay, so the lows are what you draw from, and when you go down in a rising market and you go down into a falling market, you always go from the top of the rise, and then you hit all the tops as you go down, and you want to make it the tightest possible that you can be. Let me go ahead and draw one for you. I'm going to do it on the weekly chart, and the reason, as you see, when you go to my pattern chart, and I haven't drawn any patterns on here, is because there wasn't really any. There wasn't any to draw, and that's why I didn't draw any. So let me continue to waffle, because I want to just get this out to you, because it's important information that you should know. So let's talk about, and I talked about this in the past, we want to be able to draw, for example, a trend line when we have a trend. So if I go ahead and draw my trend line, actually let me get my pencil first. To have a trend, this is something that, you know, a very, very small portion of the community knows. You need 12 or more bars, and I've spoken about this, in the direction of the trend before you can get a valid trend. So when you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, when you have 12 bars here in the direction of the trend, we don't actually get confirmation of that trend until we get a break below the lowest low. So this bar here, which was what, the 10th bar, the market not breaking below that lowest low did not change the direction of the trend. So anyone that you saw out there, anyone, and I mean anyone, I don't care how intelligent you think they are, anyone who drew a downtrend line in this area here, their analysis was completely wrong. There is no trend because we did not get 12 or more bars in the direction of the trend. We cannot draw a trend line if we don't have a trend, okay? And now let's talk about an uptrend, okay? Well, because we did not get a switch to a downtrend, this whole move, which I've spoken about, is still considered one move to the uptrend. So what we want to do then is what a lot of people are doing is we're drawing trend lines like this, okay? Now the rule with trend lines is that you need 3 tops, 3 bottoms. Not 2, you need 3, okay? So you need 1, 2, 3, not 2, 3. Now, a lot of people are drawing trend lines right now where they've got the market coming up and they've touched this one, they've touched this one, and they've touched this one. Well, first of all, these two here are considered one move, okay? The only way that this is considered two moves is if the market ran up and ran down over 3 bars, not 2 bars, over 3 bars. That is this, 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 okay? So you can draw a trend line because you've got an up bar in between them. Anyone who's drawing a trend line like this, turn off their analysis and walk away because it's not a valid trend line. I don't care how smart you think they are, it's not valid. So this trend line here that everyone's drawing is an invalid trend line and should be ignored. And it should be ignored until the market comes down, touches it, moves higher, and at the moment it would only be valid when the market moves above this peak here. Okay, so this trend line would actually not be valid until the market moves up here again, yes, all the way up there, and comes down and touches this trend line for a third time. So what do you do? Well, how do you get a valid trend line in this run? Well, you have to look back. You have to go back further. Let's go ahead, and I wish this lag wasn't as strong. We have to go back to this low because it's the lowest low on the run, and we have to try and find a valid trend line. Now, as you can see, if we take the trend line this way, we've got to try and get it as tight as we can. What we have here is we have one low. This is what I was talking about. We have one low. The market's moved up, come down into that red bar, hit another low. It's moved up, and it's moved down into that outside bar, which is another low. That is that low, high, low sequence, which means that's 2 moves and not 1. So this is a valid trend line and one that we could be watching. What happens though when the market advances so far away from it that we can't even anticipate the market falling this low before this active support line, or active trend line in this instance, becomes active? Well, you need to be able to then draw pivots, okay? So you need to strengthen this trend line. And the only way you can do that is by tightening it. Now, when you tighten the trend line, you don't want to break any bar by more than 2%. So for example, if I take this low here, because this is the last low, which is the outside bar, and I try to bring it up to this low up here. If I zoom in and I do a price measure from this low down here and I go up, as you can see, if I can click off it, we're at 7.2% above, below the trend line for these bars in here. So we're below the trend line by 7.2%, which would invalidate this steeper trend line. So there's a reason why I haven't drawn any trend lines. It's not because I don't know or I can't see any trend lines. It's because based on the actual rules of drawing trend lines, there's no valid trend line, okay? And then with the patterns, I haven't drawn any patterns because, well, I mean, you could have drawn a pattern in here, that's valid, but we're already way past that move. It's because there are no valid things to draw. Again, you could draw anything from head and shoulders, you could do anything in this, yeah, sure. Shoulder, head, shoulder, you're out and about. Of course, that's the past now. We're now looking at this information up here. So there's a reason to my madness, and it's because I'm trying to give you the accurate information, okay? I don't want to be drawing lines for the sake of drawing lines. We're here to follow rules. Okay, can't believe I just waffled for 20 minutes. I really hope you got value though. Okay, so let's take a look at the swings. Okay, so let's not take a look at the swings. Let's take a look at price because we know that the market's moved down. This is what I wanted to get at. So the last time I spoke to you, I got it wrong, okay? Yes, I'm gonna make my calls wrong, and I don't encourage you to always, you know, with the gospel, believe everything I'm gonna say. I'm gonna be wrong. And last time I got really hypish when the market reversed on the 17th, just shy away from a price cluster. And I thought that perhaps that the market was going to be reversing. I was more bullish than I was bearish. And I was suggesting that we were going to get a higher low. Okay, well, obviously that didn't happen. We did get our lower low. But what's important that once we got our lower low was that we switched. We were able to switch quickly. You see, the forecasted turn date was the 18th. The market turned on the 19th. It did breach below this band here, which then, at the moment, at the point in time when that did happen, I made that, I don't want to say like an emergency, but I made that not very good video and I put it out to you. That if it does go down, then we are definitely looking at this next band. And the next band, obviously, we were looking at time counts of around the 27th, and we wanted it to come into this area here, and we wanted it to, if possible, turn on the 27th. So let's take a look at this date here. That was the 28th. So what happened, if we go in, zoom in and make this bigger, was a few hours after the market closed on the 27th, the market came down, wicked into the price cluster on the 28th. So when we started to get the wrong date over here, I started to look forward and recalibrate a few things. So there are a few dates that are out. The market wicked down into the price cluster and then reversed. And that is really what I want you guys to learn how to do. It's how to analyze these moves and how to make good decisions on them. Now I did buy on the 28th. I can't remember if I bought in the early morning or later on in the evening for Australia time, not US time, so around here. But I did buy on the 28th because I felt that that was a better buying opportunity than it was for this one back here when I said that the probability was lower. So the probability down here is definitely a lot higher. And if we look at, let's go up on this. If we look at our VIX fix for Bitcoin, as we can see, we have our equilibrium up here. Last time the market, where was it? Here, so let's go down. The market was starting to approach equilibrium, and I said that once we move into this section down here, we could be closer to that equilibrium, which may also give us another signal that the market is primed for reversal. We didn't quite get there, so I believe we got to around the 20, maybe 21, 22 section. Equilibrium was around 25, so it's the midpoint between around 50, then we have around 25, then we have around 5. So it did get pretty close to equilibrium, which is good because we want as many confirmations as possible before we move into the market. This move up has taken us further away from the equilibrium point. The further up we go, the further down this goes on average, and the longer it stays under our sell point, we want to be getting an idea on market topping action and market topping patterns, market topping behavior. Okay, when it comes up into equilibrium, we want to be looking for reversals in the market using various forms of analysis. And when it gets above the 50 point, we want to be looking at reversals in the market, and at the same time we want to be looking at very high emotional events occurring in the news, such as Bitcoin's crumbling, Bitcoin's crashing, and all that sort of information. So if we go back in time, and I'll just recap you once more. This is the September period, and the September period moved into equilibrium, into a price cluster on a time date. And that's important. That's why we're using the same theory. As you remember, when we moved into great fear, the VIX index for the Bitcoin market was above this red 50, or 45, sorry, 45, there we go. Just glad we got that one sorted. So above the 45 period, okay? And that means that we would be looking for bottoming action or bottoming patterns to occur. And this one here, when the market moved down, it was actually at equilibrium that it moved down on, which means that the fear in the market was no longer there. So that's something that we need to just take into consideration. All right, so there's gonna be two more things I'm gonna show you. First of all, everyone's talking about Elliott wave, the Elliott wave structure. I'm going to show you my Elliott wave, okay? So everyone's got their own forms of analysis. I'm just gonna give you mine, as simple as that. So I believe that we're in a 5-wave Elliott wave structure to the up move as we move into the end of the cycle, okay? So where we are right now in this is, I believe that we were moving into a wave 1 and then down into wave 2, and now we're in a wave 3. Now wave 3 is generally both the strongest and the longest of waves. It doesn't have to always be the strongest and longest, but it generally is. Now wave 3 is only going to be valid if, let me go ahead and get that, if wave 3 can remain above wave 1 top, okay? So once, let's go ahead and put this in. Once wave 3, so once this move here, once this move falls below this black line, wave 3 is no longer valid, and we need to reassess Elliott wave. What that means is that this whole move here could be considered just wave 1. I know it sounds very complicated, but it could be considered wave 1 if you know anything about Elliott wave, okay? But for as long as it stays above that, I believe that we are in currently a longer form wave 3. Wave 3 always has a 3-2 structure, and if you don't know what a 3-2 structure is, it's 1, 2, 1, 1, so 1 down, 2 up, 2 down, and then 3 up. So 3, 2. So 3-2 structure. So in this period right here, we could be right now still part of the this up move, I should say, is wave 1 of wave 3. This move down could be wave 2 in wave 3, and then we could be moving up from that. Now, based on where we are in time, so we're now approaching the end of December, for us to be in a longer term wave 3, that would actually mean that we would be stretching out in time. Now, I've got an anticipated sell date in Bitcoin, and I've had that for a little while. And that anticipated sell date in Bitcoin was always going to be the 21st of December. So between the 21st and the 22nd, I believed that the market could top out. We might get a polarity shift and it might actually bottom out. But I believed that back in, I think it was October or something, Now that there was a date to be watching. Now we're already on the 2nd. So for us to get from the 2nd to the 21st in just under three weeks, okay, and for me to be looking at selling, Bitcoin actually needs to scoot higher in some form of parabolic move. And I did say last week that the dynamic in Bitcoin has changed. And I noticed that when I move over to the mass pressure chart, that as soon as we didn't get that burst higher in November, that the dynamic had changed, and that I wanted to catch that early. Because actually, let's go ahead and show you now. This right here, as soon as the market came down, so it came down, and then during November, when the market did this instead of this, we got a massive change and shift in the market. And that is why in the last video, which was now 2 weeks ago, I said that the dynamic has changed, and I don't believe that we're facing the same outcome as what we thought we were. And that doesn't mean that I'm not bullish on Bitcoin still. I just think that it's going to take a bit longer to get to where we want it to go. And that, in my opinion, is okay. You see, let me take you back in time on the mass pressure chart. And this is going to be a lesson for anyone who enrolls into any form of research or analysis on this sort of theory. This does not mean that the mass pressure chart is wrong. Doesn't mean that at all. But it just means that the interpretation needs to change. So this is a Bitcoin topping pattern. This is what it looks like. This is what we've currently got. When this market moved, or when the forecast, I should say, moved from a slow start to a massive peak, what we got in the actual chart was a very strong run. What is important, in my opinion, is not what the forecast says, but the points in time that the forecast actually takes its turns. So what in this instance is that, sure, technically we could be looking at it, not now, and the action of a topping pattern, as we can see, is our move up, move down, and then our lower move down, which is kind of what we're getting, another rebound, and then our grind lower. I know that was messy, but the time aspect of it, though, instead of being towards the end of the year, has actually occurred before it. Let's go ahead and resync this, because I believe I have it off center. Okay. If Bitcoin's market and the Bitcoin cycle is going to extend forward, so let's head over to the cycles section, we would be looking for a low in Bitcoin to occur between possibly the 5th of December out to the 4th of January. So it is possible that we're going to get a right translation top and a low any time period here. So the low actually occurred, what was it, the 27th or 28th? It occurred lower, like it occurred a few days before the actual market has approached cycle low period. So there is every chance that we one final push lower into that low, or that the market's already bottomed out. I don't have any, and the fact that we are at the 2nd of December and the next turn date was actually the 1st of December. And when is this low? That was the 30th of November. I think that we could still get a push lower over the next few days, maybe into the 5th to the 6th of December. We could. Okay, with the turn date being a potential 1st of December, and again, I'm talking before the event has actually played out, so I'm doing exactly what I did in the last video. I'm just hypothesizing right now. We may have gotten an early top on the 30th, and we might get a push down into this cycle low period. Hypothesis, we'll see how it goes. Once that happens, we may see a shift in dynamic into a potential sharp move. But the longer that this drags on, the less confident I am of the move up occurring. So how low can this run go? Well, I'm going to just move over right now to the price form, and I'm just going to do some quick price analysis. And I'm going to do it off screen because of this lag that's on the virtual machine right now. I want to just put it on there and just see where we have any price clustering occurring. So give me a moment. Alrighty, so this is the first time we're going to be looking both up and down, and I've just gone ahead and just done a bit more analysis, and I'm going to do now 2 scenarios. If the run lower is still on, okay, so we'll cut to the chase right now. If the run lower is still on, we could be getting a push down, first of all, into this first box, and then 2 second boxes are appearing. So we've got one cluster which is overlapping another cluster, so these 2 clusters are overlapping. So we could get a push lower into this area I don't want to say like a crazy crash, but if the dynamics of the market is changing and that Bitcoin is not providing its safe haven status, and it is going to be dragged down with any decline in the US market, we could see Bitcoin crumble past this one and down into these 2 boxes. Okay, we could see it. We don't want to write it off. If, however, Bitcoin does find a low, I wanted to now take a look at where it might find some tops. Now there is 2 tops that I've been watching for a while now, and then there is one that I've just put in, which is now the same color as these two lows. Okay, I try to keep them the same color so we can watch them. Okay, so the first top, there's definitely a price cluster around the 90,000 to 91,000 mark. There's a price cluster around the 86 to 88,000 mark. Though I think that this one right here, based on the current market pattern, okay, so based on where the market is right now, with no new data, okay, so once new data comes in, this one may become invalid. So based on where it is right now, and if the market does move higher, once it breaches the first top, which I had put in, I think that this one here is going to be of great significance. If it does breach that, then these two are the next significant levels. So we definitely need to be watching. Let's go ahead and take a look and put it out there around 82 to 83,000, no, 83,000, sorry. So this one's just the 83,000 mark. This one is around 87,000. This one's around the 91,000 mark. So 83, 87, 91. Those are the three areas that you want to be watching if this Bitcoin market does advance. And if the Bitcoin market does decline, these are the two most significant current boxes to be watching. If, that is just if, the market just breaches through this one right here. So this one was significant and we still need to watch it. And it could be a double bottom pattern, but that's just where we are right now. Now I know that I'm coming out and not being very bullish like I was in the past, and that's because, you know, I've seen the dynamic change. So now I need to start planning both A and B. I can't just hype up, you know, the bull run. I can't hype up something that I'm no longer confident in. So if the market does advance and does finish this blow off top, good. But right now, since this top here and this top here in this range occurred, the dynamic has changed, and so that's all I have. I hope you find some value. As you can see, I've been waffling now for over 40 minutes, but I hope you see some value. I'll try to cut this video shorter, and I'll see you next time. Okay, so if you haven't already and you want to get my form of analysis in the market, go ahead and hit the subscribe button. You can also hit the like button. I like it when you hit the like button. It also helps the YouTube algorithm. And if you like to get notified when I publish the videos, you can hit that little bell icon, and that'll just send you a little notification in your YouTube inbox when I publish a new video, and that way you can come back and watch these. Okay, so in the future, or we'll take a deeper look. So in the future, or we'll take a deeper, or this was a topic that I didn't talk about a lot in the past, and I'm going to start talking about it a bit more and what you want to be looking for. So that's all I have, and I look forward